I'm always getting sent links to people who have created a YouTube video or a social media post claiming this incredible way that nobody's really known about, that you could, reduce your taxes to zero if you follow this one advice. And they inevitably ask me, is this true? Is this correct? Well, what happens is a lot of times these people are leaving out important pieces of information, or they're advising you to take advantage of some aspect of the tax code, which is, let's just say, not frequently used. What does the IRS do when it gets that sort of thing? It has what it considers frivolous returns as being something that they want to go after. Oftentimes, these people are committing fraud trying to get refunds. So there are certain things that are like red flags to the IRS, and they will flag it. Now, when the IRS processes a tax return, when they initially receive it, they do some initial verification checking, and that's where they'll check for certain frivolous return flags. There's also a later process which they do data mining to look for relationships that would indicate that maybe this is a return that should be audited. But they're trying to do more and more of it when they receive it. We had a client who was talking to us about getting a alternative fuels credit and reducing his taxes that way. We've also seen people who have claimed fraud based on theft of their cryptocurrencies. They file a loss claim on Form 4684, and that too can be a typical flag that the IRS will flag it, set it aside. They will freeze it in a sense, which means that they're not going to issue a refund or do anything with it until they've investigated it. So it goes to a frivolous filing office who will then issue a letter, typically a 3176C, saying, we think this is a frivolous claim, and they're asking for evidence of what you have claimed. Basically, a prove it letter. And if you don't prove it, then they will deny it. One thing I should say is if you're looking to claim an obscure claim like this, don't do it unless it's real. Because the next step after it goes to the frivolous claim office is they may set you up for a real audit. An audit is not something you want to go to. They're long, they're drawn out, they're emotionally tense and traumatic, and they can cost you money. So, by all means, if you're going to claim some obscure loophole, you really want to make sure you're on solid ground. You can call us at CryptoTaxAudit to get a professional advice on that situation. If you are paid in crypto as a US taxpayer, this next year is going to be very different. When you're paid with crypto, you're either paid as a contractor, in which case you will get a 1099 NEC, non-employee compensation, or a 1099K, then, or you will get a W-2. And the recent law changes have made it so that the reporting requirements become extremely complicated for your employer. So what'll happen typically is that they will report that you receive cryptocurrency, and they'll report the dollar value of the amounts at the time that they gave it to you. So I think you'll see a little more detail in a W-2. In a 1099, not quite sure if the regulations are as clear as they need to be in terms of how that's going to look. But when you do freelance work and get crypto, then in US dollars, at the time you receive those coins, basically constitutes your wages, and you're going to have to pay taxes in US dollar terms based on the US dollar value of those wages. What happens if I lost money through some sort of scam or fraudulent loss or some sort of Ponzi? Is there ways for you to get some sort of reduction in your taxes for the loss that you suffered? And the answer is yes. Now, it does depend upon the type of loss, how we do it, but the answer is still yes. If you actually were a part of a Ponzi scam, which means it was a financial fraud and it's well documented, and somebody was indicted or a company was indicted because of the fraud, then that gives rise to what's called a Ponzi scam loss, where you can write off the amounts that you invested and hadn't gotten reimbursed by the company, and then you can write what you lost off on your taxes. Now, you cannot write off the fake appreciation you were told was happening. You can only write off amounts that you put into the investment. Other types of losses you can't document. Maybe it's a romance scam, or maybe somebody said, put this into my account, and then they ran off the money. These are other types of losses. If it's some other sort of theft loss, then we can write that off as well. Form 4684 allows you to do that. And what happens is it's really good in terms of write-off because it goes onto your Schedule A, which is your itemized deductions, and you can reduce the entire amount. Whereas if you had a capital loss in capital gain trading, you're limited to $3,000 loss a year. But this, a theft loss, can all be written off in the first year. In fact, we have a client who had $500,000 in loss from a theft. And we were able to put that onto a Schedule A, and he was able to reduce his taxable income by $500,000. Turns out he didn't have $500,000 income that year, other income. So the excess that was unused from that $500,000 write-off is treated as a net operating loss in his personal life, and it's rolled over to the next year. That's incredible. When you claim a loss, a theft loss on your tax return, it will often be flagged and rolled over into a department at the IRS which looks for frivolous tax returns. Clearly, some people may have claimed false losses in order to reduce their taxes. So they would consider that a frivolous tax return. That department looks at the returns and decides if they want to demand greater evidence or support for that. There are things that we do at CryptoTaxAudit when we prepare a tax return to help reduce the chance of that. Other people may find themselves on this list, and you'll be contacted with what they call an IRS letter 3176 or a 3176C letter. And this is basically saying, we think you've given us a frivolous tax return. You did something, please prove that you did it right, which would be either to prove that you had the loss or to certify in writing it's not a loss. Basically, the IRS is calling you out saying, prove it. And oftentimes it's difficult to prove a loss, but work with our office. We can help you gather the right information. We put together certifications into the tax return ahead of time to prevent the IRS from even taking that extra step of going after your tax return. So definitely want to claim all the losses, but in certain situations, the IRS may come back to you and ask for more information. That's fine. So always claim losses. If you have us prepare your tax return, we can put it in just the right category, and we will tell the IRS what type of loss it is in such a way that protects you from being audited in the future. Work with us, we'll take care of it from you. You should always consider becoming a Tax Shield Represent member to enable that to happen at no additional charge to you.